Our team over at Income Nomad has just come across a TradingView indicator that honestly feels like a stroke of genius. This tool gives you a ton of extra insights into price action that you'd normally miss. To put this into perspective, imagine being able to see every single candlestick from a smaller time frame neatly displayed inside one candle from a higher time frame. That means no more flipping back and forth between charts. No more guessing, just clear information right in front of you. And here's the best part. In this video, I'm also going to walk you through a step-by-step plan to turn this indicator into a complete trading strategy that could put you way ahead of most other traders. Before we dive in, make sure to smash that like button and subscribe to our rapidly growing channel so you don't miss on future tutorials. Alright, let's get into it. Now, the first thing you should know is that this technical analysis indicator isn't limited to one market. You can apply it while trading crypto, stocks, and Forex. It even works well in options trading. That said, remember that options carry a much higher level of risk. Alright, to add this indicator to your chart, just log into your TradingView account and open any chart you'd like. For this walkthrough, I'll use the ETH against USDT chart on the 1 hour time frame. Going to indicators, search for LTF Candle Insights by Zierman, and you'll see it pop up. Big shout out to them, by the way. Once applied, here's what it looks like. The indicator essentially draws a price range representing the market movement over the last 20 candles from a lower time frame. You can tweak this number in the settings under the Inputs tab. You also have the option to pick which lower time frame you'd like to visualize on your current chart. Ideally, you should maintain a gap of 2 or 4 time frames between your base chart and the lower time frame you're referencing. To make things even clearer, both time frames are displayed in the top right corner of your chart. Another important element is the blue baseline. And let me share a little secret here. This baseline can be extremely useful in spotting trend continuations. So first, let's talk about what a trend continuation actually looks like. In an uptrend, the market prints higher highs and higher lows. A bullish continuation simply means the price continues to move upward after a brief pullback. These pullbacks, often called demand zones, can usually be spotted with the naked eye if you've been trading for a while. But if you find it tricky to identify them, the LTF Candle Insights indicator make the process much easier. For instance, in this chart, we see a clear uptrend with new higher highs and higher lows. Then a pullback occurs. At this point, it's time to zoom into those lower time frame candles inside the indicators box to avoid missing the next leg up. Since we're on the 1 hour chart, each box candle is broken down into 4 15-minute candles. Right now, the 15-minute candles are sitting below the blue baseline, which tells us that bullish momentum hasn't yet returned. The moment those candles push above the baseline, that's your signal to get ready to buy. Of course, it's never wise to rely solely on one indicator for your trades. Think of this as just another confirmation tool to add to your arsenal. What I like to do is to combine it with Easy Algo B10, which has been extremely reliable for countless traders. Unlike basic indicators like RSI or moving averages, Easy Algo comes with some unique features. Let me show you how to set it up for price action trading. In the settings, hide the buy and sell signals. Turn on 4-hour support and resistance, and hide things like golden pockets, candle coloring, and volume profiles. The goal here is to strip away distractions and keep the chart as clean as possible while still having the tools we need. These things let us perform multi-time frame analysis and uncover trade opportunities most traders won't see. Follow closely and don't hesitate to rewatch this part if you need to. Here's how the full strategy works. First, you need to spot a major demand zone where price intends to react. In this example, there's a strong 4-hour support level that has repeatedly triggered reversals. This suggests a large number of orders are sitting there, ready to get filled. Once you've marked this level, analyze the ongoing trend. You want to see price forming new highs and lows. To make your job easier, EasyHalgo automatically draws trend lines. A solid line means the level is still intact, while a dashed line means it's been broken. The more times price respects a trend line, the stronger it becomes. Our objective is to enter at the retest of a trend line. For the final confirmation, we'll go back to the LTF candle and size indicator. Watch the candles in the box closely. Once a large bullish candlestick closes above the baseline, that's your entry trigger. Place your stop loss right below the trend line. In terms of profit targets, you can either aim for the next major supply zone or stick to a fixed risk-to-reward ratio of 2 to 1. This strategy requires patience and precision, so it's not something I'd suggest for absolute beginners. Take the time to pause here and carefully study this example of a long trade before moving forward. Now, let's flip things around and look for a short trade setup. The process is pretty much the same, just in the opposite direction. Step 1. Identify a major supply zone where price has repeatedly been rejected. In our case, there's a clear 4-hour resistance level where momentum slows down whenever price approaches. Step 2. Confirm an intact trend line. If you want to keep the chart clean, you can disable the broken trend lines. Once the trend line has been retested and you see momentum stalling, it's time to check those lower timeframe candles. This time, we're hunting for signs of selling pressure. Look for strong bearish candles closing below the baseline. That's your green light to open a short trade. Place your stop loss just above the trend line and target the demand zone below. Again, make sure your risk-to-reward ratio is at least 2 to 1. That's the full breakdown of this strategy. But before you go applying it in live markets, please make sure you test it thoroughly on a demo account. Train your eyes to spot these setups quickly and consistently. Only after you're comfortable recognizing them in real time should you transition to live trading. Thanks for sticking around. Hope you found this tutorial valuable. I'll catch you in the next one.